Hey everyone, lead training with Stocks Trade, Tim Bohen. Today we're going to talk about 7 actionable tips to boost your stock market success. Right off the bat, you've heard me say it a million times, hot sectors, hot sectors, hot sectors, hot sectors. Hopefully Beetlejuice doesn't show up. But listen, it is so important in isolating hot sectors because when it comes to all-day plays, like stocks that can, like when we're talking about new traders, okay? One of the biggest things newer traders struggle with, and you've been there, is the wild volatility. The explosive moves up, you see a huge profit, you're a deer in the headlights. You don't want to take profits. All of a sudden, it yanks back. Now you go from euphoria to fear. Now you don't want to take the small loss because you were up big, okay? These crazy volatile stocks are awesome. We love them. Trade them every day. But for brand new traders, it can create a lot of panic and bad decision making. What we love about the all-day moves and the multi-day moves, slower trends, easier to manage, less, panic, okay? And that's hot sector plays. Because the thing is, when you're talking like artificial intelligence or electric vehicles or space plays or COVID plays or any of these sustained hot sectors we've had, you'll see stocks tend to gap up, grind slower through the day, nice close, tend to gap up the next day, put in multi-day moves. You don't have these panic situations. So especially when it comes to day trading and swing trading. Like, listen, if you're swing trading a non-hot sector stock, I don't know what you're doing, okay? Because you need multi-day, you need buyers day after day after day. If you don't have buyers day after day after day, everyone's going to forget about your stock, the volume's going to dry up, and it's going to fade. Now, next question I always get, how do I know what the hot sector is? Listen, sometimes an unpopular answer, if it's really a hot sector, you got to be living under a rock not to know, okay? Like if you fire up your scans in the morning, if it's a real hot sector, there's going to be 5 stocks. There's going to be 5 AI stocks. There's going to be 5 EV stocks. There's going to be 5 biotechs are the biggest gainers for a true hot sector. Like it should be, unless you're like, it's your first day trading, if it's a real hot sector, you'll freaking know it, okay? Because everybody will be talking about it. Twitter will be lighting up, the chat rooms will be lighting up, and your scans will be lighting up. So as always, don't anticipate, react. Okay? If you're guessing the hot sectors, good luck. Just look at your scans. Look at the flow. That's all you got to do. Next thing is harnessing volatility. Okay? We love, 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 love volatility. Something I get, the other day I got a question on pre-market prep. Somebody asked me about TCBP. Okay? Former runner, stock that ran in the past, but that day that I got asked about it, the day before it traded like a couple 100,000 shares, like a 17-cent stock. That morning, it was trading like 1,000 shares. The previous day, it had, I think, 1.5 cents of range, on a 17-cent stock. And then that morning, it had like a penny of range. And I'm like, how do you expect to make money on a stock with no volume and no range? Now listen, you can buy this TCBP, some crappy biotech. You can buy it and hold it and wait for months or years and pray to whatever entity you believe in that they drop some press release. But how is that a repeatable strategy? Sure, sometimes you get lucky. Sometimes this low volume sideways stock, they drop some news and all of a sudden you wake up and everybody's like, hey, it's up 100%. It's not a repeatable strategy, okay? You got to focus on volatile stocks. You got to look at the biggest gainers. You got to look at past runners, former runners. Stocks that have ran in the past tend to run again. That's why you focus on former runners. Next thing is have a watch list, multiple watch lists based on sectors and overall momentum. Like what I do is I use what's called the rolling 5-day watch list for momentum day trades. So what that means is every day you've got every week you've got a Monday, Tuesday, Wednesday, Thursday, Friday watch list. And all the biggest gainers, today is Thursday, all the biggest gainers from today will be on that watch list. And then what I do tomorrow, going into Friday, very first thing I do is I go back to that Thursday watch list and look at the stocks that are holding the gap and still trading volume. And then I roll those over. Then I go back to Wednesday. Then I go back to Tuesday. Then I go back to Monday. Because what we're looking for, those day 3 surge patterns, those multiple day runners, because again, we know, especially in low float stocks, the ones that run and hang around the highs tend to explode higher because of short squeezes. One of the best ways to spot short squeezes is look for crappy low float stocks that are still at the highs days and weeks later. Because typically what happens, you get that parabolic move to the upside, blows up the shorts, and then they fade back. If you're positioned and ready for that squeeze, whoo, the potential is incredible. Next thing, understand technical analysis, okay? Support and resistance levels. Now, a lot of people will ask me, and I've done a lot of videos, you can check out the archive, but listen, I can't teach you technical analysis in one 10-minute YouTube video. I would recommend a lot of books. Technical Analysis Using Multiple Time Frames by Brian Shannon changed my life. I bought that book when it came out, I think 13 years ago. I still refer to that book. But one of the best ways to learn technical analysis is see it done. Something I do, maybe you know, maybe you don't, every single morning pre-market prep. I go live at 8:30 Eastern. What is one of the main things we do? We map out levels on a chart, resistance, support levels, key breakouts, key breakdowns, basically channels. We annotate the charts, mark them all down, and look for key levels. I think, as much as I love the book, please read it, please get it. The best way to learn technical analysis is just like learning any other language. Like, to me, it's a language. How do you learn Spanish? Well, what do? You get Babbel or whatever it is, and you do a 20-minute lesson every day. I do 15 minutes on pre-market prep. It's the best way to learn technical analysis. Hit the link below. Next thing you know is staying informed, keep up to date with the market news and other developments. Many of you know I have a particular disdain for the mainstream media, and particularly the mainstream financial media, okay? But I do have a list of trusted sources. Now, another unpopular answer, these sources are kind of expensive and do add up, but I think if you're a professional trader, if you're taking this seriously, you have to understand that you will have overhead expenses. Wall Street Journal, I've read it since I was in middle school, 30 years probably, okay? It's about, I don't know, it's on auto pay, I think it's 30, 40 bucks a month, okay? Barron's, absolutely love Barron's. If there was one newspaper that I would subscribe to, like if you made me get rid of the others, it would be Barron's. What I love about Barron's is it's weekly and it has a much kind of broader view of the overall market. Now again, I think it's 47 bucks a month. Again, it's on auto pay. We're up to 100 bucks. So the other one is the FT, Financial Times. What I love about Financial Times is it is based in Europe. It's crazy the different views you'll see versus US media versus European media. And especially now that we're in a global world with the Ukraine situation and China and COVID and all these things that have made the world smaller, I think it's important to have those sources. I think FT is like 67 bucks. So as always, one of my most unpopular answers, it's about 150 bucks between the three, but I highly recommend them. Again, if you're gonna be a professional in anything, you got to understand you're going to have overhead costs, and going to CNBC or going to Twitter, oh my, I fought off the aneurysm. Anyway, get real data, get real analysis. Next is understand risk to reward, okay? So many people trade stocks with upside down risk to reward, and when I mean that, their downside is exponentially higher than their upside. Now, short selling. Okay, especially short selling low floats. Something that if you follow me on social media, I like to post the memes and have good times messing with short sellers. They're the most easily butthurt segment of the population in the entire world. But anyway, the point is, I'm not anti-short selling. By no means am I anti-short selling. For the first 10 years of my trading career, I was 90% a short seller. But what happens in this day and age with all of these easy to borrow stocks, like what changed in the last few years is you can basically borrow any stock at anything. Like you can borrow 1 cent stocks, okay? And what that has created is just this crowded trade on the short side. And you see so many people shorting stocks that are up like 20%. And I'm like, what's your best case scenario? This thing pulls back 7%. Meanwhile, these stocks go up 100, 200, 300%. Now, hopefully you stop out before that happens. But what if there's slippage? What if you go to the bathroom? I mean, these stocks move fast. So it's a good example of that skewed risk to reward when you're shorting that parabolic short. Vice versa, late day fades, completely different scenario. So make sure you're targeting setups that have a favorable risk to reward versus terrible upside for exponential downside. Next thing you need to always do is be flexible, okay? The market's always changing. You know, I mentioned in a video the other day how, like, there was about the first 6 months of the year, like, dip and rips were insane. Low float biotechs, you know, those big gainers that pull at the open and reclaim the high a day with float rotation and a press release. Like, they were off the chain for like 6 months. And then I think it was late June or maybe early July, they just kind of dried up. Now they're back a few weeks later, but if you weren't agile, you'd keep trying to trade a setup that had kind of gone dormant for a while. You need to always be looking at what is working, always tracking your data, always reviewing, and, you know, listen, collaborating with a team and a mentor. You know, back again to pre-market prep. You can get in there. We have an amazing community. I'm there every single day, multiple times a day, and you can talk to people like, hey, what happened to dip and rips? We talk about it every day. We're like, they're dry. They're not out there. Focus on 9:45 or later. Then they came back, and we're like, hey, they're back. Usually it just takes one. So that being said, stay flexible, stay agile. Last thing, always, always, always stay proactive and committed to long-term success. And when I say proactive, always be doing something every day to make you a better trader. And when I mean that, it could be reading a book. It could be working on your physical health. It could be working on your sleep. Like, you're going after one of the most difficult things out there, but because of that, it is one of the most rewarding. So if you think of any elite performer, businessman, athlete, musician, you know, all of these peak performers, if you look across the board, there's all this research out there. One common thread you will see through all of your peak performers is they were constantly working on their craft. You need to do that as a trader. You're not taking a week off. I mean, again, I'm not saying you got to spend 12 hours a day. Every day you're doing something to learn, grow, and maximize your success. And that being said, the best way to do that, get on pre-market prep, and we'll do it together every day. Click that link below.